Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to another episode of Tax Smarts Unlocked, where we untangle the often complex and sometimes intimidating world of taxes, offering you actionable insights and a sprinkle of humor along the way. I'm your host, David Robson, and today we're diving deep into the tax benefits of incorporating your freelance business. If you're a side hustler or a seasoned freelancer, there's a good chance you're either wincing at your recent tax bill or dreading the DIY tax preparation dance. But fret not, because by the end of this episode, you'll be armed with information that could transform your freelance journey. First, let's lay some groundwork by exploring the different business structures available to freelancers. When you're freelancing, typically, you're operating as a sole proprietor by default. This means there's no legal distinction between you and your business. You are the business. While this structure is the simplest, it comes with its own set of challenges, namely unlimited personal liability and taxation on your business income at your personal income tax rate. Then we have the limited liability company, or LLC. It's a popular choice for many freelancers because it provides limited liability protection, which means your personal assets, like your home or car, are generally protected if your business incurs debt or is sued. Additionally, an LLC is flexible tax-wise, as you can choose to be taxed as a sole proprietor, partnership, or even as a corporation in some cases. Finally, we have the corporation. Incorporation separates you as a person from your business legally, which means there's a significant layer of personal asset protection. Moreover, corporations provide a spur of potential tax benefits, like the ability to write off a larger scope of business expenses and access to tax deductions that aren't available to sole proprietors. Now, here's where the magic happens for freelancers deciding to incorporate: tax benefits. Incorporating offers tax flexibility that can be a huge game changer for your financial strategy. Often, corporations have lower tax rates compared to individual tax rates, and this is a significant advantage when we talk about retaining more of your hard-earned income. With an incorporated business, you can potentially save on self-employment taxes, deduct more expenses, and even spread income over multiple years through dividends, which may come at a lower tax rate than ordinary income tax. We'll discuss more about these deductions and benefits shortly. Through incorporation, you shield your personal assets from business liabilities, which is arguably one of the most vital benefits. This means if someone decides to sue your business, or if you accrue debt, your house, car, and personal savings remain safe. For a freelancer who's dealing with multiple clients and projects, this protection is invaluable. A significant draw for incorporation is the potential tax deductions. Legitimately written off business expenses can help reduce your taxable income. Expenses such as business travel, equipment, marketing costs, and even health insurance premiums, which are partially or fully deductible for corporations, offer substantial reductions in your taxable income. Plus, corporations may offer retirement plan options with advantageous tax implications, allowing more savings toward a cozy future. Now let's talk tax rates. As a freelancer operating as a sole proprietor, you're subject to personal income tax and possibly self-employment taxes as well, which can be a hefty chunk. In contrast, corporations are often taxed at a corporate tax rate, which can be lower. Furthermore, withdrawals from your corporation can be in the form of salary or dividends, offering opportunities for tax strategy planning that reduce your total tax liability. Still skeptical? Let's walk through some relatable case studies. Take Chloe, a graphic designer initially overwhelming herself under a sole proprietorship model. After consulting a tax professional, she opted for corporate status. By incorporating, she was able to shift high income into lower tax categories through careful planning with salary and dividends, substantially reducing her tax burden while protecting her assets. Then there's Mike, a software consultant with increasing clientele. By incorporating, Mike not only safeguarded his assets, but also started writing off larger business expenses, including a portion of his home office, software subscriptions, and client meeting expenses. This change resulted in significant tax savings, allowing him reinvest into his business. It's also important to address common misconceptions, such as the myth that incorporating is too complex or costly to be worthwhile for a freelancer. While it's true that there are upfront costs and administrative tasks involving incorporation, the long-term tax advantages and asset protection can far outweigh these initial hurdles, especially if you have enough income to justify the change. The critical takeaway here is the importance of proactive tax planning. Consulting a professional who understands the intricate workings of both state and federal tax laws can offer tailored advice that suits your financial situation, ultimately keeping more money in your pocket. A tax professional could assist you in understanding deductions you're eligible for, structuring your salary and dividends optimally, and ensuring compliance with tax regulations to avoid penalties. Now, when considering incorporation, here are a few steps to guide you. First, assess your financial situation. Understand your income and expenses to justify the potential advantages of incorporation. Next, consult with a tax professional or attorney to determine which business structure best aligns with your needs and ensures compliance with local regulations. Finally, once you decide, make sure to file articles of incorporation with your state and obtain any necessary licenses. Remember, informed decision-making is key and could lead to significant savings and benefits. Before we wrap up, let me take a moment to share a light-hearted tax anecdote. Picture this: a freelancer diligently entering every cafe purchase as a remote office expense. While humorously overzealous in their deduct-a-thon, it underscores an essential point. Accurate, honest record-keeping is crucial, so maybe keep those lattes out of your write-offs, unless you want your tax preparer to chuckle disapprovingly. In closing, I encourage you all to carefully evaluate your tax situation and consider the long-term benefits of incorporation. While it may initially seem daunting, understanding business structures and how they affect your tax profile is empowering. The key is not just to save on taxes, but to plan proactively so you're not left dreading April. Thank you for listening to today's episode of Tax Smarts Unlocked. We hope you feel more equipped to tackle your tax responsibilities with confidence and maybe just a little smile. Until next time, keep those receipts organized, and remember, proactive tax planning is the smartest tax strategy.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.